What's going on, everybody? And in this video, we're going to be talking about three high-yielding dividend stocks that are very undervalued right now. Nobody's really talking about these stocks. I honestly hadn't heard about them until a few days ago, so we've been going into analysis on all three of these high-yield dividend stocks. We'll be talking about my portfolio and a few different things that are going on in the market. So before we go any further in this video, all I said, if you enjoy it, you make sure to give the video a thumbs up and you subscribe. You turn on those post notifications for videos coming out every other day. You know how it goes if you're not new to the channel. And thank you so much for watching the video. And let me talk about this. I want to just give a huge thank you to the person out there who used my referral link. This is the first referral I've got on M1 Finance. So I got a free $50. I literally woke up this morning and I checked my account and it's like, hey, $50. You woke up to a $50 increase in your cash position. So thank you for that. And what I've been doing with my portfolio, to just talk about that for a second, is I kind of readjusted my portfolio. If you saw some of my past videos, you'd be like seeing that I had a lot more of a target on income fund and real estate and consumer and stores, but I'm kind of aiming for more of a growth. So what I've been doing is just buying completely into my pie that I've created. If you want to look at this pie, use the link in the description below. You can also use referral, just like I said. Deposit $100, you get a free $50. You make 50% return on your investment. But looking on this, I've just been buying and adding more to all of my stocks. You can go check those out if you want to, and that is how I'm playing it. I currently do not own any of the three dividend stocks we're going to be talking about in this video, but let's talk about them and get into the real video. So the first stock we're looking at is ticker PBR, Petroleo Brasileiro. I'm not even going to try and say this. Over the past year, this stock is up 0.76%. Their forward earnings per share is $2.02, and they pay out 91 cents per share. They have a whopping dividend yield of 8.52% and a market cap of $68.09 billion. Over the past year, the stock is just up 0.893%. So this stock is a little bit risky, and everybody has a different way they like to invest. If you're going straight for the income, you can definitely make some good value in investment like this. And over the past 10 years, that's whenever things get a little bit dirty. They're down 58.27%. Look onto their dividends. Their grades might not be the best, but they have a current payout ratio of 45%, a yield of 8.52%, which is very, very high, and a growth record of 1 year. Now, the one thing that does kind of keep me on my toes when it comes to looking at this dividend stock is their dividend frequency is on an annual basis. And I'm not the biggest fan of annual paying dividend stocks, just because something about them, it just doesn't sit easy with me, and I'd rather have quarterly or monthly payments coming into my portfolio. You can just see this is their dividend history. It says annual, although these look like these are coming up quarterly, so that's a little bit suspicious. We'll look on this real quick. We can see right here on Yahoo Finance, they have a trailing 12 months earnings per share, it says right here, of $3.66 and a forward dividend of $2.09, which is 19%, which is an insane dividend yield. And so I did some more digging into this, and I went to go look at the real numbers on what is this company stuff. And when I actually went into their investor presentations, everything was in Spanish, and I couldn't find the English version, so we're just going to have to go off of Yahoo Finance Seeking Alpha. But what we're seeing right now is the profit margins are pretty solid, 39% and 47% operating margin, which is very solid. Quarterly revenue growth of 70%, and earnings growth, it says not available. So this is pretty solid. Their forward annual dividend rate is $2.09 per share, giving them a forward annual dividend yield of 19.6%. Insane stuff. That gives a payout ratio, it says right here, of 23%. If this is a very, very undervalued stock, looking at just the relative factors to everything, because they have a PE of 5.25. That's incredible. So what does this company do? This company produces and sells oil and gas in Brazil and internationally. It engages in prospecting, drilling, refining, processing, trading, and transporting crude oil from producing onshore and offshore oil fields. So they're selling and producing oil. If you go look on the conversations on Yahoo Finance, everybody really likes this stock. But let's talk about what's going on. Their revenue, this is all in Brazilian dollars. I'm really not sure what their currency is, but you can just see it's kind of all over the place. But in COVID, they took a hit and they're coming back up. Net income, looking at this real quick, is doing very well, 25.74 million, which is very solid. That's the highest net income that they have had yet. Their balance sheet, if we want to take a look at that, more assets and liabilities, so that's not necessarily a huge concern to worry about. And operating cash flow or free cash flow are looking very, very solid, which is important when it comes to investing in dividend stocks. Right now, Morningstar is giving them a fair value of $11.20, and they currently trade at $10.63, so they're trading within their fair value. Looking on some more things, just to give you a nice visual aspect of all this stuff. Free cash flow slowly increasing, earnings per share slowly increasing, EBITDA slowly increasing. You can see that revenue doing pretty solid ever since COVID, coming back up, which is uptrending. The price targets, analysts love this stock. Analysts love all three of the stocks we're talking about today. They have a 27% upside, which is incredible stuff. They trade for $10.77. $12.40 is the low price target, and $16 is the high. Now, looking on this real quick, it says that they're trading below their intrinsic value of $148 a share, and they're good value compared to their industry, the U.S. oil and gas industry. But compared to the market, not so much. That is the first stock we're going to be looking at. The second dividend stock is ticker SBLK, Star Bulk Carriers Corporation. This stock over the past year is giving investors insane returns. They're up 162%, and it says they have a dividend yield of 23.08%, which is incredible. A forward earnings per share of $6.38 and a dividend rate of $5. That's huge. Over the past 5 years, they're up 324%, and over the past 10 years, it says they're down 73.98%. But if you do some math, 23 times 10 is 230, so you should be outweighing the gains in dividend income. Looking right here, it says they have a payout ratio of 78%, dividend growth record of 1 year, and they pay their dividends on a quarterly basis. Looking at the dividend history, what we'll see right here is that the dividends are increasing, but they haven't been paying out these dividends for that long. You can see they used to pay out a little bit before COVID, but now they're starting to pay out these dividends. So it is a little bit more of a risky, but it's a high risk, high reward. They're starting to just pay these dividends, and if they can continue to do this, it could provide great returns in your portfolio. Their trailing 12 months earnings per share was $4, which is not as much as their forward dividend, but their forward earnings per share is supposed to be greater than their dividend. Now, these are some huge numbers. They have a good profit and operating margin, quarterly revenue growth and earnings growth up incredible amounts, but probably not amounts that are sustainable. All that matters is that they're growing at profitable and positive rates, which is what we really, really like to see. Yahoo Finance gives this company a payout ratio of 14.15%. And what this company does is they are a shipping company engaging in ocean transportation of dry bulk cargoes worldwide. So what dry bulk cargoes is pretty much things like iron ore, coal, and grains, things like that. So they're a big transportation company based in Greece, which is actually pretty interesting. A country I've actually always wanted to go visit. But this is the largest U.S. listed dry bulk company. We can see they have a fleet of 128 high quality vessels, which are like those big boats. On a fully delivered basis, the average age is approximately 9.6 years, and during the last 4 years, they've acquired 58 more vessels. So that's pretty solid, giving them a nice future looking ahead of them, and fleet geared towards larger vessel sizes, which offer the highest exposure to a rising market. Now we'll see on their earnings and different things like that. As it says that for Q3, their net income was $2.20 per share, and they're paying out $1.25 per share. So that leaves money to pay out shareholders and money to invest back into the company. Now, looking on all this stuff, the total revenue increasing. COVID took a little bit of a hit, but we're rebounding back, and the net income is looking incredible at $211 million. Looking on the balance sheet, $3.1 billion in assets to $1.6 billion in liabilities. That's pretty solid. And cash flow up in the positive, highest it's ever been. Free cash flow looking very solid. Same with operating cash flow. Now, looking on Morningstar, they are trading at a 4-star rating at a 13% discount, which is pretty solid stuff. We always like to see that. And the analyst price targets, analysts love this stock, giving it 62.85% upside to its $37 average price target, 39 high and 35 low, trading far below the price targets from its current $22.71 price. Now let's talk about the third dividend stock on this list, which is ticker OCSL, Oaktree Specialty Lending Corporation. Over this past year, this stock is up 32.85%. Over the past 5 years, they're up 39.36%. And over the past 10 years, they're actually down. Now they have an earnings per share of 60 cents forward and a dividend rate of 62 cents forward, giving them a yield of 8.38%, and they have a PE of 11.15. They right now have a solid payout ratio of 93.46%, which is not the best thing you always want to see, but at least they're not going out of their way to take on debt to pay out that dividend. Their dividend has actually have a 5-year growth rate of negative 6.85%. Looking on the dividend history, we'll see that they have been paying these out for a while on a quarterly basis, slowly increasing ever since COVID, but we can see in 2017 they did cut their dividend down and have been increasing it since then. Now let's talk about this. They have an earnings per share trailing 12 months of $1.46 and a forward dividend yield of 62 on Yahoo Finance, which is different than what we got on Seeking Alpha, and a PE for the trailing 12 months of 5.09. Now we'll see right here is they have a nice profit margin, 113%. I'm not exactly sure how you get a profit margin of that. You can't really do that unless you're selling things that literally cost you no money to do, which I guess is if you're making incredible returns on your investment, which is what this company does. But they have a quarterly revenue growth of 46% and a quarterly earnings growth down 48%, which is not what you always like to see. It says they have a payout ratio on Yahoo Finance of 34.59%. And what this company is they're a BDC company specializing in investments in middle market, bridge financing, first and second line debt financing, mezzanine debt, senior and junior secured debt, yada yada. The list goes on and on and on. They're a BDC company that invests in companies and makes money like that. So I'm going to zoom in this real quick so it's a little bit easier for you guys to read. But total investment income was $63.8 million, 35 cents per share for Q3 of 2021. Adjustment net investment income was 16 cents per share. Their net asset value per share is up 12%. And their quarterly cash distribution was 0.155. So they're leaving like 0.005 cents per share for this company to pay out to themselves, and the rest being paid out to shareholders. So they are cutting it very close on that payout ratio currently. Now what we'll see right here is that they have assets under management of $158 billion, and they just continue to increase this number. So this company historically long term is doing pretty solid. You can see where they're invested and where they have different offices, different like that. They're a global company, but their main headquarters is in Los Angeles. They have a lot of upside potential long term looking. I currently am not invested in these companies, remember that. But revenue been increasing since 2020, looking very solid. Net income up at its highest it's ever been. The balance sheet, what we'll see right here, pretty solid, about 2-to-1 current ratio, or 2-to-1 just asset liability ratio. And free cash flow, not looking that good because the operating cash flow is kind of bringing them down. But that's what we have on that part of the company. The current price targets on this company are $8 to $8.50, giving about 8 to 10% upside, which is pretty solid. And Morningstar gives them a fair value of $8.38. So they're trading at a 12% discount, which is fairly discounted. But that's what I have for everybody within this video. So if you did enjoy it, make sure to subscribe to the channel. Turn on those post notifications for videos coming out every other day. I'm about to have a portfolio leak, show you guys how much is in my M1 Finance portfolio. I'll even show you my growth stocks, different things like that. But again, thank you so much for clicking onto the video. Thanks for watching all the way to the end. Make sure to check out M1 Finance. Use my referral link if you want to get a free $50 by depositing $100. We both get free $50. Check out my portfolio if you want to. Thank you again, and I will see you at the next video.